Hi, welcome to Velcovays. So this is the third and the last video on this positional strategy of Bank Nifty, which is based on straddle. We have done the simulation for June and May uh, in the previous two videos. So before watching this video, please do watch video 1 and video 2 for this particular strategy. So now in this video, we will do the simulation for April month expiry. So this is April month, this one. This will be very interesting actually. If you can see here, market has a big candle, then a gap up, then again big candle, and then there is a fall of 3000 point with a gap down in between, and then a rise from the bottom. So let us see whether strategy is able to manage this particular moment. So let us start with OFSTRA. I go to simulation, Bank Nifty. We go to first week of April expiry. So the expiry is on 7th. Start date will be first. Expiry 7th. Okay, so we are good to go. We have spot at 36,456. So 36,500 is what we will sell the straddle at. 36,500. 36,500 is, yes, sell. 36,500 sell. Why I'm saying that the first two videos shall be watched before this, because we have discussed on length about the rules and logic in the first two videos, so it will be easy for the watcher to comprehend about the rules and the adjustments. So let us see what we have sold. We have sold 478 and 503. 470, let me record that. 478 and 503. 503 right? So we have stop loss above 800. So till then we can go quickly on the simulation timeline. So I'll go fast. We have to see around 800. Okay. So the CE is approaching towards 800. So I will go a little bit slow here. 774, 785, 801. Our stop loss for C leg is 836. So let us see. 811, 834. So we exit the CE here at 834. And we sell the CE leg again at 226, near about 226. So get the option chain, sell the CE at 226, 231 we have, nearest one. So our stop loss for the individual legs will be now 2 times of 231, that is 460. So if any of these open legs go to 460, we will exit the trade completely. So let's go. OFSTRA will again go out of memory, it looks to me. Anyway, let us see till it sustains. So P is at 199, C is at 225 at 3:25 p.m. So we don't need any adjustment as such here. Sorry, we don't need any adjustment, so we go further. OFSTRA will again go out of memory anytime. So next day morning, what has happened is that market has opened huge gap up. This gap, this one here, and our PCE has gone to 460 and PE has gone to 70, but still we are sorry, 460 is just double of 231, so we have to exit the trade here because the CE premium has become has hit the stop loss as per this rule. If adjustment 1 has happened, then the exit price will be 2 times of the entry of the adjusted leg. 2 times of 231 is 460. So we exit the trade with 3790 stop loss. So let me record that. Expiry 7th April minus 3790. Number of lots is 1, 2, 3. Let me try the formula. So now what do we do? We have got an exit on 4th April. 4th April should be Monday, I think. Yes, Monday. So we can take a re-entry. Let me just refresh the Opstra. See, this was supposed to go off. That was the reason I was wondering. So we'll go to option simulator guns again and Bank Nifty 7th April expiry. Uh, 7th April expiry. And we have to take a trade on 4th now because on 4th our stop loss got hit. 4th. So 4th morning we have at ATM at 37,800. 37,800. Sell 37,800. Sell PNL 350 and 5. Sorry, I sold it wrongly actually. We sold wrongly. 1 second. We have to sell 37,800 only. 37,800. So our sold premiums are 350 and 416. Now these premiums are low compared to because it's Monday morning only and premiums are comparatively low. That is one of the reason that when market goes up, it is easy to handle because premium comes down when market generally goes up. So easy to handle the CE, then in a falling market to handle the PE. And that is the reason that I take only the protection against PE, not against CE. CE protection, CE still is manageable. You can see here we lost 3,700 rupees in a gap of so around 550 point gap up. We have lost 3,700 rupees. So we are in trade again now. So our stop losses for these legs will be 612 and 728. So we have to keep a watch on CE 612, which is likely to hit the stop loss first. Till then, I'll go very fast. So back. $6.12 is the stop loss. So 920 we sold at 350 and at 925 441 and 930 we got the stop loss hit again on the same day Monday. So we exit at 610. Sorry. 610 एग्जिट हो जाएगा ये दिस वन सी. And what we do here now is we sell a C premium of 278 roughly because adjustment one has happened. 278 का C बेचना है अभी. 278 I will sell 257, which is near 278 का 20 point. We sell 296. So now what will be our stop loss for these open legs? 296 into 2, that is 580. If any of these legs go to 580 now, we will exit. Let's go. Again the C is misbehaving. 518, 515. Okay, come down now. At 1525, we have a C high, then the P. So we don't take any protection. We straight away move to next day. Still okay. Just keep a watch on these two premiums. Our stop loss is 580. Okay. So at 1525, we have a PE of 213, CE at 134. So since PE is more than CE, we have to take a protection today. Buy. Go to day end. Go to next day morning. Okay. So here we have to exit the PE protection wala leg at 219.1. And the other two premiums are 263 and 77. Remember our stop loss is 580. Okay, here we are. If you see here, let me go back a bit. If you see here, the two open premiums, 286 and 27. So one premium is 10 times, more than 10 times of the other premium. So this makes us to exit the trade right away. So 4561 is the profit we will exit it. इसमें था ना 17th का expiry था, 7th expiry, sorry. 4561. So we gained here 4561. And we had some more number of trades now. How much are they? 1, 2, 3, 4. 4 trades. 4 lots. So 3 earlier and 4 this now, 7. So in the first week of April expiry, we made nothing but only 600 rupees. But if you see the first week of April, this is 1st April, 2nd April, 2nd छुट्टी था, 3rd छुट्टी था, 4th, 5th, 6th, 7th. So we made a move from opening to high of 38,755, which is 1350 points, 2350 points up move with a gap of 600 points. And from there, then we came down by 1328 points. So this is the kind of move it has handled and still did not lose. So we have to now go to week 2. Let me reset Opstra, otherwise it will go out of memory. Week 2 of April. The expiry will be 14th. Am I right? 14th, yes. And the start date will be 8th. 14th. No, expiry was on 13th in that particular. 14 was, I think, Ambedkar Jayanti holiday. So 13th. And Bank Nifty. So 37,600. 37,600 sell. 37,600 sell. Let us record the sold premium. 511, 463, very high premiums. 511 and 463. So till 800 we don't have to worry. We will see the stop loss level after 800 is touched. Till then I'll go very quickly. So on day 1 at 3:25 p.m. we have CE which is higher than the PE. So there is no need of any kind of overnight protection. Go next. Still there is no need. Both are comfortable. Our stop loss is 800 plus. So on day 2 we have CE of 326 and PE of 271. Still there is no need of any kind of protection. Let me see whether we touched 10,000. No, I don't think we touched. We go to next day. Yes, next day morning we have touched the 10,000 mark. So now our stop loss is 7,500. The trailing stop loss. You can move further. So now another. Let me just go one more step more. Our stop loss is now 8,500 because we have moved further 1,000 rupees. Our stop loss is now 9,500 because we have moved to 12,000. Our stop loss is now 10,500 because we have moved to 13,000. Okay, so we are on Tuesday, one day prior to expiry now at 3:25 p.m. Our CE is at 290, PE is at 117, so we don't have to take any protection. At the same time, if we keep a target of 14,000-15,000 for the strategy for the week, this could have exited also. Exit हो जाता आज ही. But we are going by the strict rules. So let us go further. Day end. Next day morning, fine. So our stop loss is still not far away. But if you see here, the one premium has become 10 times, more than 10 times of the other premium. So this satisfies the exit criteria of the strategy. So we'll exit on expiry day at 9:25 p.m. 14,343. 14,343. This is 13th actually. 14th was holiday. Okay, anyway, just leave it. 13 April. The number of trades are 2. There is no adjustment, no overnight protection. So this week was easy. You can see it also. 13th वाला expiry जो है. Yes, this is where the market stayed. This one sideways. So we have done now the 2 weeks of April as well. So now we will move to week 3 of April and see how that panned out for us. So we now move on to week 3 of April. So let me just take the payoff date for April. Week 3 will be 21st. Start date will be 15th. No, but 15th was holiday because of Good Friday. So we started on Monday. That is on 18th. This will be 21st April. So now since we starting the trade on Monday, you refer to the EX5 condition that if we starting on Monday, if we get 5,000 rupees, we have to exit the trade. Simple. So let us see. We have 36,800 spot. So 36,800 we sell. We record the premiums 439, 404. Premiums are low because we are starting on Monday. 435, 404. So stop loss will be 700. Till then we can move quickly. Okay, on 1525 on day 1, C at 387, P at 291, no need of protection. Go to next day. So here we are. Our rule is if entry happened on Thursday, on Monday, we exit. So we exit on the first candle at 920 with a profit of 5673 plus 5673. Number of trades are 2. So exit has happened on Tuesday. So we don't take any re-entry. We straight away go to week 4. Week 4 is 22nd starting, 27th, 28th, wait, 22nd, 28th. 28th will be expiry. And the spot is at 36,400. So we sell the straddle at 36,400. Here we go, sell 36,400. We sell. What happened? I think the Opstra got hanged again. Let me just refresh. Simulator, Bank Nifty, 28th, 22nd, 28th April, 36,400 is the spot. We sell 440. We sell. Record the sold premiums. So 440, 378, 440 and 378. Premiums are low even on Monday, on Friday. So 661 will be our stop loss for the CE and 770 for the PE. Till then we can go very fast. 670 we have to look at. So P is at 602. Our stop loss is 661. So at this point, at 15:25, 3:25 p.m., our PE is more than CE. So we go for the protection. 182 by add position. We move to day end. We move to next day. So we exit the P protection here at 296. And let us check the other premiums. Other premium 862 has hit the stop loss because PE stop loss was 670, 661 to be precise. So we exit this PE also at 862.75. And what do we do further? We sell the PE of 141 premium. 141, 134 we will sell. Okay. We move now. So we have to keep a watch on these two open premiums. And now our stop loss will be 360, 182 ka double. So we have P less than C. So there is no need of protection at 3:25 p.m. We keep moving. One second. So 380 is the premium of 1 lakh. So the stop loss has got hit here. Let me see. 401, 365, 392. Yes. At the opening candle, we have a stop loss. So minus 5132. We have to take the loss. Minus 5132. So, and which day the exit has happened? It has happened on 26th. So 26th is which day? Is Tuesday. So we don't take any further entry. And our loads were 4. So that's it. We ended with April 3 as in a profit of 15,655. So we are done with 3 months simulation now, and we see out of say how many weeks? I think 4, 4, 8, 5, 13 weeks, because in June we have 5 weeks. 1, 2, 3, 4. 4 weeks we had a loss. The total loss on losing days was minus 14,835. Minus 14,835 was loss of 4 days. 4 days out, 4 weeks out of 13 weeks. So profit कितना होगा? This minus this. We had 74,000 rupees profit in 9 weeks. 9 winning weeks. So if we see average loss on losing weeks is 3,700 and average winning is 8,234. Right. So if you see in 3 months, we got a return of 59,274 as gross basis and 57,778, 786 is on net basis on a capital of 175. 1 second. 175,000. So roughly how much percentage we got in 3 months? Around 33%, which makes it around 11% return average on a month. Okay, which is not bad actually. It's on net basis. Even if you take 2 to 3% as slippage and difference between backtesting and live trading, so still 8 to 9% we had been able to generate the profit. Now I have taken this 3 months period because it has wild movement of 6 7 thousand point up down then up. You can take any month basically and do this simulation or even back testing. uh, I have done this for quite a long period, around 1 year I have done. Of course visually I not recorded or done systematically, but still it has been giving a profit of 10% on net basis month on month consistently, despite having the gaps and the wide movements in the market. Now, few questions. Why do I take the protection against only for PE? One of the friend wrote on YouTube as well. Why not for CE side as well? See, when we see a black swan event, what is black swan? Basically, something going drastically wrong suddenly. So when we see a black swan in terms of stock market, it is something like next day morning we open huge gap down 5%, 10% on corona type time, even 10% on index basis. But how much, how many times have you seen the gap ups on upside, which is as severe as on the gaps on downside in last 1 year, 2 year, or 4 years? Not many. They may happen on some event day when there is some Fed meeting in US overnight, because from India we are not expecting any news to flow overnight or after market. So this gap shadow will be driven basically by the external factors from the global market and mainly from US. So if there's any event on the in the night and we know it in advance, Fed meeting or something else, some important announcement related to banking interest rate, inflation data, or housing sale data, etc. So on that particular day, we can avoid the strategy carrying the position. Whatever we gain during the day, we live with that. We don't carry that uncertainty because that is the only possibility that when the market can gap up hugely. Otherwise, most of the times, whenever the severe gaps happens, they happen on downside. Number one. Number two is that it is easy to handle CE in market which is going up. But when we go on PE side and when market is going down or a huge gap or a huge spike down, then it is very tough to handle the PE. PE IVs of the premiums go very nasty once market is downtrending severely or opening gap down. So that is the reason that I prefer to take protection only against the downside. PE just becomes monster. It is tough to handle, and it is that is why in all my strategies I give a special treatment for the PE side. I try to exit or get rid of from the PE as soon as I can. Okay, C side still we can manage the things. We can firefight on C side, but we cannot firefight on P side if the severity of fall is steep. So that is one reason. Second reason. Other than that, this strategy has performed very well for me. You can backtest this. What about automation? See, this is easy to automate as long as there is no A1 adjustment. A1 adjustment means the first adjustment of 75%. So unless this happens, this number two, it is very easy to code in ME broker or whichever platform you use. Okay, even the basic platforms like TradeTron can be coded. But of course, TradeTron you cannot uh, ramp up the quantity or scale up the business on TradeTron with. So if you are doing 10, 20, 50 loads, it is fine. But if you want to do something like 1,000, 2,000, 5,000 loads, it is not advisable to automate it on Tradetron. Tradetron is a very basic platform where everybody is a strategy creator. So, but still, it can be done on Tradetron as long as this A1 adjustment has not happened. Beyond that, it needs a little bit of hack, little bit of workaround, but still can be done because fetching the live premiums, whether it is from the initial trades or it is from adjustment, is a bit tricky in this basic platform called Tradetron also. But still can be done. I can help on to that. I have done this strategy to some extent on Tradetron code. So you can get in touch with me if this needs to be done. So this concludes our video on second weekly positional strategy. After this, in the coming videos, we will focus on intraday non-directional strategies. So basically, you would have seen many strategies running nowadays on ME Broker, MT4, TradingView, or even for that basic platform like TradeTron, on Kite, Quantiply, that people sell ATMs of both the indices, Nifty and Bank Nifty, and then they work basically on the uh, theta gains uh, on sideways market. But these get very nasty when market moves in one direction. So we have plenty of adjustments, exit plans, and trade management for such kind of strategies where we sell the ATMs of Nifty and Bank Nifty both, and then manage that in even trending market also. At least 15 kinds of exits and adjustments are there, which will be discussed in coming videos for intraday training and trading. This will work precisely on the concept of theta gain, theta eater, somebody say theta gainer, theta bakshak, whatever they call it. Um, but the basic concept is that we are relying on theta to give away some premium and we make profit and market stays in range bound. But when the market goes directional or there are spikes, these strategy struggles. So we will try to capture the logic and the firefighting mechanism so that on trending days or on days where things are not so good for the non-directional strategies, we end up with minimum losses. So that is in coming videos. After that, we will take up the directional strategies and few more positional strategies in Nifty also. Right now, we have discussed two for Bank Nifty. So that's it. So stay tuned and subscribe and press the bell icon so that you can get the notification for further videos. And do like if you feel there is an effort and there is some content in it which helps people to code some strategies, have some robust system, and even if you have some feedback which is positive or negative, please do share. So in this strategy, whatever we have discussed is a basic concept. Okay, mind can be applied to make it more robust, more versatile to handle the markets, gaps, downs, spikes. So a lot of work can be done. Okay, this is basic thing, basic thread I have shared, and we can do. I have done a lot more into this strategy to make it more robust. The return will come down definitely when we try to do a strategy which is with low DD. So low DD comes with low return definitely, but still uh, we move forward with other strategies for now, and you can improve, test, and then maybe do live trading on this strategy if it suits your risk appetite. Everybody has got their own risk appetite. So thank you guys. Again, thanks very much for giving your time to watch the video. Thanks a lot.